Thank you for joining us on yet another edition of this program. I'm Temple Ashaju. Now, post-elections, the markets have been reacting sideways, with the fixed income market contracting to its lowest this year so far. Average yields, of course, dipped some 92 basis points week on week to 13.52%. That's the way some other analysts have it covered. In fact, some are reporting 12% plus in the treasury bills market, but that's largely driven by foreign and local buying at the both ends of the curve. That's talking about the short and, of course, the long end of the curve. Now, the reverse was, however, the investors. We are in our report in FSH research in February, we alluded to the fact that in January we had the highest in so many months past. This month, so far as yesterday, the inflows in February was far higher than what we had in the month of January.
And why is that?
Well, like I mentioned, the fact that yield in the global market is quite low. The expectations that when we were entering this year, people were thinking that the FOMC will increase rates, but the first meeting they had this year is like there's going to be a pause in rate hike. Again, the fact that oil price is beginning to go up now, and those are the things that are responsible for the inflows from foreign investors. So more like a limited opportunity for them to earn good, yield overseas.
So rates have actually crashed. I mean, stop rates at the primary market auction too, was really, really low because of the huge demand. What's your expectation for what will happen next week in terms of auctions and, in fact, at the secondary markets generally?
Okay, so if you look at the trading on Friday, there seems to be a pullback. In FSH research, we think that there are a lot of issues that the government and the central bank needs to address. We still had fragile growth in the economy. We have fragile growth in purchasing power in the country. We had, potential hike in exchange inflation rate because of PMS adjustments and then electricity tariff adjustments. We think that the government needs to deal with before there will be investment in those two critical sectors of the economy. So, and we also have fragile, foreign exchange market. Oil price is going up now because of what is happening in, Venezuela. Basically, the IMF, World Bank has said the global growth is still very fragile. Our average oil price this year will be lower than last year. So those are the issues that will not make the, fixed income yield to be at this level to continue to go. We expect that with profit take, which we saw some of them last week Friday, and then going forward, it may likely go back.
So you folks at FSDH are one of the firms that also believe that a lot of international central banks by this time should be, hawkish in terms of their decisions or monetary policies, but so far they've been dovish.
Right. Like I mentioned earlier, the economic changes, and as the new information comes to the market, new development, we review it. We revise our outlook and our forecast, and that's how it is. So it's not static. Okay. But what is going on? Like I mentioned, pause in the rate hike from the FOMC in the United States. There are expectations that towards the middle of the year, there may likely be a rate hike because the entire global market is trying to unwind their balance sheet size to say we are going to implement a monetary policy normalization. So the period of excessive asset buy-in to pump money into the system is gradually over, and therefore they're trying to repair their balance sheet. Yes, there are still a lot of issues here and here in Venezuela, in Germany, in Turkey. They are trying to see how the impact of this development will affect the monetary policy stance. In Nigeria, it's going to be very tight. They are not going to employ expansionary policy this year from our expectation because of exchange rate and then inflation rate.
So what exactly is at the long end of the curve? Is that where the cookie jar is for a lot of domestic and foreign portfolio investors here?
Okay, like I said, that one where you have high interest rates, and therefore when the limited opportunities in the for investment in global market because of the low rate over there, they will want to take advantage of this to earn those long, yield going forward, and that's what we think they are doing now.
Mr. Akinwumi, Thank you so much for making it down to the program. This was a short time, but then we'll have more time, next time on the program. Thank you so much for speaking to us.
Thank you for having me.
Ayodele Akinwumi is the head of research with FSTH Group. But central banks' recapitalization demands for microfinance banks is leading key players of the subsector to the stock market. Find out how after this short break. Welcome back to the part 2 of the program. But with effect from April 2020, microfinance banks in the country will be expected to have met their minimum recapitalization requirements, jacked up between 150% and 900% for institutions operating state and unit licenses. In this interview with the president of the Nigerian Association of Microfinance Banks, Mr. Rogers Nwoke, he tells us how operators are bracing up to leverage the stock exchange for capital raising.
As I believe is public knowledge, the Central Bank of Nigeria has raised the minimum capital requirement for microfinance banks, and that is to be concluded next year. And we have about 885 microfinance banks today, capitalized to the tune of about 93 billion. And to meet these new capital requirements, about 250 billion is required in new capital. We've started some discussions with the stock exchange, and today's meeting is to bring some, if you like, finality to the arrangements so that we can have effective sensitization that as many of our members that can come to the capital market. As you're aware, out of the then 1,000 microfinance banks, only 2 are listed, and we think that that is not good enough. So we're here to meet with the exchange to see how we can bring more microfinance banks on board, because we think that the market will be a lot deeper. We think it will bring some additional robustness, into the market. Apart from that, it will redirect the capital flow. What you find out is that a lot of money is being mopped up by banks, commercial banks from the bottom of the pyramid, and they are lent and used to support large corporates and all that. So we want to come to the market to redirect the flow of capital to ensure that funds goes to the MSME sector, and we know strongly that the microfinance banks are in the best position to flow capital to the people that need it.
How confident do you think your members are in the Nigerian stock market? Because of the 2 to 3 microfinance banks listed here in the Nigerian Stock Exchange, one of them, Fortis Microfinance Bank, has just been liquidated.
Yeah, that shouldn't be a problem. We used to have 107 commercial banks. We went down to 87. We went down to 25. How many do we have today? So companies come in, and go. It doesn't stop listing of new companies. That we're even talking about one microfinance bank, that is no longer there. Think of how many commercial banks that are no longer there. So that's not the issue. That somebody failed in business does not stop other people from going to business. We are confident in the market because maybe people don't know. The Nigerian investor seems to be shying away from the microfinance sector because of this perception of not doing well. But I can take you, check the records. Many foreign investors are putting money in microfinance banks, making their monies and getting out. For a microfinance bank to go to a commercial bank and raise even working capital, it's such a difficult thing. All manner of collateral requirements, they tell you weak corporate governance, several reasons are brought about. But today, I can tell you that foreign investors are coming to this country, giving debt capital to microfinance banks. People are giving $5 million, $10 million, euros, without, just by negative pledge. And those microfinance banks are paying. So the truth is, I think it's time for people to look at this sector as holding the trigger for the next microeconomic development of this country. And the earlier we do it, the better. One of the things that we try to do, our mission specifically is to ensure that no microfinance bank currently existing goes out of business on account of this recapitalization. So we encourage as many as have the capacity to come to the market on their own. We encourage mergers and acquisitions. And for those who, that don't have that capacity to come on their own, we are also considering floating a national microfinance bank to absorb all the smaller, microfinance banks. So for as many of our members that are willing to be part of one big thing, rather than being the 100%, having 100% ownership of a little thing that may not survive, versus having 1% of something big that you get your returns and it is sustainable. So NAMB is working, towards, floating a national microfinance bank to absorb, members who are willing to be part of it. So the whole idea is at the end of the exercise, when it ends, even if the number of microfinance banks are reduced, no business, has been lost. And we've seen it happen, before in several other climes, and we're adopting models that can, guarantee the survival of microfinance banks in Nigeria.
So this National Microfinance Bank, is it the same thing as the one that the Central Bank of Nigeria has just floated?
No, the Central Bank has floated theirs already in working with the Bankers Committee. I think today it's called National Microfinance Bank. We tried to make them see reasons why they should rather channel those resources to existing microfinance banks. But I mean, we're not in any position to stop it. I think that one has come to stay, and as regulation makes it compulsory for every licensed microfinance bank to be a member of association. So one new member has been joined to us, but no, that's not one. We are going to float NAMB, National Microfinance Bank, okay, to accommodate, to absorb all the smaller microfinance banks that are not able to recapitalize. So if today you are doing business with 20 million naira, which is the minimum capital, or 25, but you're not able to go to the next threshold, which is 200 million, rather than go out of business, you can now transfer that your capital of 20 million into an equity of a bigger bank. So you probably now have 1%, it doesn't matter what percent, but you are part of a business that is surviving, and all that the economy will suffer with microfinance bank or any business going out of it will rather create a boost, instead.
But quite a number of investors and, of course, depositors still see an average microfinance bank in Nigeria of today as a safe haven for illicit flows.
No, not anymore. You see, microfinance banking in Nigeria is properly regulated. The Central Bank of Nigeria and the NDIC are doing a lot of work, and we also not just report to these institutions, we also report on money laundering, NDLEA, FIRS, those who are listed, of course, have SEC reporting requirements. It's not exactly, today, microfinance banks have BVN machines. The central bank...
Across board, or some of them?
Across board. The central bank actually supported us last year by subsidizing the cost of acquiring the BVN machines, and many microfinance banks. Today, if you have any, app of any of the banks, you could see up to more than 50 microfinance banks, that you can actually transfer monies to, and they can receive it. This, we are bringing, upgrading our members to that, platform where digital financial services is the way, to go. So microfinance banks are enlisting and enrolling people in the BVN, platform, and we are also, many have also connected to, collaborating with fintech companies to provide these services. So there are, microfinance bank is not any safe haven for money launderers and, other financial crimes. No, those, anybody who is trying to do that is taking a very personal risk, because
all about microfinance banks there, and they look to leverage the stock exchange. Well, the stock market, the stock exchange precisely, will be organizing a workshop on fixed income trading for members and, of course, the broker-dealer community next week, Monday, March the 4th. And that's to bring some more activities to trading on bonds and other securities like that are tradable on that platform. And that's it on the program for this weekend. Thanks for watching. I'm Temple Ashaju. I'll see you next time. Bye for now.